Welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. Happy New Year's, everyone. And in this video, we're going to be talking about 3 stocks to buy January 2022. I'll also be including some options with deep in the money strike prices that you could consider for your own portfolio. So in the last few days, I came out with some videos, the top 3 ETFs to buy, the top 3 dividend stocks to buy, the top 3 Canadian stocks to buy. And in this video, again, the 3 stocks to buy for January 2022, as I am mainly a growth investor where short-term volatility may be higher, but that's the price you have to pay for outsized long-term gains. And let's see what's in store for the markets in 2022. If this is your first time stumbling on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button and let's get started. Alright, so the first name is going to be Amazon. So disclaimer first, every company I'm going to be talking about is going to be a blue chip company. So no surprises, we're going to keep it really simple on this channel with a lot of potential going into 2030. And I know that's a long time, but I promise you the time will pass whether you invest in these high quality names or not. And in the short term, I have no idea. Large caps might underperform mid caps, small caps, European stocks, Asian stocks, whatever stocks. I have no idea in the short term, but in the long term, these companies are the best of the best. So again, Amazon, $3,334.34 for every share, so quite expensive. Its 1-year performance was 2.38% compared to the rest of the S&P 500 that was up above 25% over 2021. You had, looking at other big technology, you had Tesla up 50%, Google up 65%, Facebook or Meta Platforms up 23%, Nvidia more than doubling at 125%, Apple at 33 or 34%, and Microsoft about 50%. So the only one to not really perform of the big technology was Amazon stock. So here we have the stock price, here we have the EPS, and here we have the PE ratio. So if we zoom in just a little bit, we see the PE ratio during the peak of the pandemic was around 90 or above 100. So right now we're trading at a PE of about 65, but if we look back in recent history, so 64, 59, 58, 77, 92, 106, going back even further, we have 112, 244, 191, 170, 540. Looking at these data points, we are now historically much significantly lower than we have been in previous years. Now, you can't just say PE ratio is hysterically low, buy. You can't just take one variable, have it in a vacuum, and just have your thesis around that one argument. But at the same time, we know that Amazon is not slowing its growth whatsoever in the upcoming, as far as the eye can see, essentially. And looking at the max chart, this one ramps up, consolidates for a while, ramps up, consolidates, and we are trending upward, making higher highs and higher lows. And if this one was to substantially sell off, I could see buyers not being too far away. Again, this one is Amazon stock, $1.69 trillion. In my opinion, it's just a matter of time. 2022 could be that year. The next stock being PayPal stock, and this one has a market cap of $221 billion. Over the past year, it is down 18.69%. And we can see that from this chart over here. PayPal was very red, maybe the most red. For the size of the company, probably the most red company that you can see. You can also see Fidelity that was down 22%, but PayPal being much bigger than that one. Otherwise, a clear underperformer of 2021, a 52-week high of 310. So at one point, it was very green. And then ever since mid to end July, we have just fallen, making lower lows and lower highs, all the way down to where we are right now at 188.58 per share. So other than it being a big component of the S&P 500, the NASDAQ, it's just one of those companies that's just too cheap to ignore at these prices, depressed for so long. One of the clear underperformers. Despite such a harsh sell-off, at the same time, it still has a market cap of $221 billion. So we'll take a look at the candlesticks on that one once we go through the next couple of stocks. The next one being Facebook stock or Meta Platforms, now at $336.35 per share, a market cap of $935 billion. So we were in that $1 trillion club back in September of 2021, and then falling off a cliff for a while with all the news that came out. We reached the bottom in early December and it looked like we were recovering. We'll look at the candlesticks as well, at all the technical analysis. So right now we haven't broken out just yet. I am super bullish on this company for the very long term and even the medium to maybe I could say even short term, because again, being a mega cap company just like Amazon, and even though it had a decent 2021, going from $269 to $336. Again, we were at $380 once upon a time. There is no reason why we can't test that price again and break right through it. Company has a lot of congressional eyes on it that want to regulate the heck out of Facebook or Meta platforms or whatever. At the same time, we know they want to be the lead company when it comes to the metaverse, not to mention they are the social media king in the world, and it isn't even close. Virtually no debt, and the biggest thing with this one as well is that statistically, its valuation is very low, again, for what kind of company this is. We've been saying that for a very long time on the channel, meaning the risk to take while investing in this company versus the potential reward is pretty attractive, with a forward PE of 22.57 and a price to sales at 8.46, again for a mega cap technology, social media king, potentially metaverse leading company. All right, in the last stock, I know I only said 3 stocks, but I just could not resist the fourth one being Disney stock. No surprise here. This is one of Nancy Pelosi's bets going into September of 2022 with a market cap of $281 billion over the past year. We're down 12.83%, starting off at about $177, climbing up all the way to $203, and then falling all the way down to where we are now, especially after the previous earnings falling all the way down to about 142, now sitting at 155. And who doesn't know Disney stock? If we look at the S&P 500 map, we see this one as well was pretty red, considering how big the company was and how well the S&P 500 did for 2021. And this price action was pretty sneaky because it hit that 202, it hit that peak, it made lower lows, lower highs, and then traded sideways for about half a year until falling off a cliff. And that just shows stocks price action can do what it wants. It can make you think that it's consolidating, big money is accumulating, and then what happens, one earnings call, bad guidance, whatever, and then just falls off a cliff. Welcome to the stock market. Welcome to the markets in general, where you can make a lot of money or lose a lot of money. I read somewhere recently that the stock market is the hardest place to make easy money. All right, and taking a look at the candlesticks, we're starting off with Amazon. We're looking at the weekly. So this was the crash back in 2020. We actually see a year prior to that, and at the end of 2018, that this crash actually looks a bit deeper than the one that we previously had. Even though in 2020 we started off higher, we didn't fall nearly as low as we did back in 2018. So the crash in 2020, we rep on higher, and right now we're just consolidating. Ever since March time, we've been making higher lows, higher low, higher low, higher low, higher low. I drew this trend line over here, this downtrend over here, and then key psychological supports and resistances. Zooming in on the daily, this uptrend over here and this downtrend are going to be compressing soon, not to mention we're below the 20 and the 50 EMA. So let's see if we compress and we break up higher or lower, which could happen very shortly in the upcoming couple of weeks. Until then, we're still very range bound between 3,200 and about roughly 3,600 until we break one of these key areas. All right, next up, FB or Meta platform. So again, we hit around 380 early September, falling off a cliff all the way down to about 309, climbing back up to 352, selling back off to 302, and then right now, again, recovering back up to about 352 again, that key resistance that we hit earlier this week, bouncing off of it, and now sitting on those dynamic moving averages, the 20, the 50, and the 200 simple moving day averages also right there. So let's see if 335 holds up in the upcoming week. And until we break one of these ranges, hopefully this upper one over here at 350, then this double bottom from October as well as November could confirm, and then we can continue making 2 steps up, 1 step back, 2 steps up, 1 step back, and then testing eventually the previous all-time highs and eventually hopefully breaking it. All right, next up, PayPal stock, this one falling off of existence. They're on 3 lines over here, the top one here being a potential resistance at about 193 that we haven't really been able to crack. The 180, the 182 level that we're finding potential buyers, similar to what we saw just over a year ago, and then also another line at about 170, 175 that we haven't quite gotten to yet in recent memory. But November of 2020 and September of 2020, the buyers stepped up in those areas. Not to mention also the summer of 2020. So what we want to see is continued consolidation, eventually breaking the 20 and the 50 EMA, filling in this gap at 225, and then going from there. A lot of work left to do with PayPal stock. This is for the long term, for a potential recovery play. All right, lastly, we have Disney stock. And if we zoom out for this one, I actually drew a trend line from the summer of 2020, so June of 2020, November of 2020, and this recent sell-off from December of 2021. And I've also drawn a trend line from April of 2021 that we keep bouncing off of and finding supply whenever we reach this trend line. So these two trend lines won't potentially meet until the middle of August of 2022. Again, these are just lines that I drew. We saw that this consolidated and then fell off a cliff, so really the price action can do whatever it wants, but let's see if it continues to respect these trend lines. We don't necessarily have to wait until August until these trend lines meet. It could break either one of the trends at any point with news, earnings, or for really whatever reason. Alright, and that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, are you buying any of the same companies? Let me know. As always, subscribe and like. I'll see you in tomorrow's video.